Hey, what's going on, y'all? So today's trade review is Thursday, June 13th, and I wasn't sure what was going to happen today. I wasn't really fully expecting to take a trade. We had tons of news. We had CPI, FOMC yesterday. Lots of stuff happening with news. Rhythmic accounts, all kinds of stuff. So wasn't sure if I would actually get a trade or if there would be a trade opportunity. But there was. I took it, and it was actually a really good trade. And I wanted to do a trade review on this one specifically because it was good. I mean, it was good. There was reasons to take it, reasons to take profit where I did. And I'm still taking the low-hanging fruit trades, meaning my setups I'm targeting is usually go for about 35 to 60 points. Now, that's a lot. For some people, that's not a lot. For me, that's a ton, especially when I was used to taking 5 to 10 point trades or less. So, yeah, I'm still loving it. So, I want to dig right into this. And for those of you that don't know, I am going to be going live here pretty soon, so I will be doing that. So make sure that you stay tuned. I will be letting you know when I do go live, but I will start trading live again. And this time, I'm going to be going live with all these ICT concepts. It's still serving me great. I'm still loving it. So let's dig right in here. This is the video. I record all my trades, as you know, and I think going forward, I'm going to just start talking more in ICT terms. I did that whenever I was trading the Apex sniper system. I wasn't teaching it, just like I'm not teaching ICT concepts. I'm not teaching it. I'm basically going through it with what I'm seeing, kind of my journey on it, So I'm not focused on teaching it. ICT has all his videos on YouTube if you're going to learn his strategies. So immediately, if we look here, this is the 5-minute chart. As I'm progressing in this, I'm being a lot more. So if you don't know, I do enter my trades based on the 1, 2, 3, 4, 5-minute chart. Okay, and I am continuously watching the 5-minute chart from an analysis and the 15-minute. And then I do look at the 1 hour and higher, 4 hour daily to try to get a bias. But I'm constantly watching the 5-minute and 15-minute. And that's basically telling me when will I start looking for an entry on the 1 through 5-minute chart. All right. So here's the 5-minute chart. And basically, I marked out my London low, London high. All right, we just made a new all-time high. So I have those marked out. And I have down here a 15-minute fair value gap and a 4-hour fair value gap. And I also have my sell side liquidity marked out down here, okay? So basically what I'm trying to do is before the open, or right around the open, I'm trying to frame out, because my trades, I take them around around 10 a.m. I look for my setup between 10 a.m. and 11 a.m. But realistically, it's between about 9:50 to 10:50. Anytime in between there. Okay. So I frame out my morning. After I frame it out, I pretty much have an idea of what I want. So overall, so let's play the video here. Let me see. I was playing around with this little, playing around with my logo there. Let's see. Let's jump here. This is the 15-minute. So you can see, here's the fair value gap. We had this big move up, right? Here's the fair value gap. We dipped right into the middle of it. Ran up, did all this stuff, came right back down pretty close to the middle of it. Now we have relatively equal lows here. Okay. Kind of pulled up, went back in again. Relatively equal lows there. So that's telling me we have some sell side liquidity being built up here. Inside, there's also a fair value gap, right? There's a 15-minute fair value gap. Okay. So mind you, this already happened. This was at 9 a.m. or no, this was 8:30. We had some news this morning at 8:30. So left that wick. It spiked up, created a new all-time high. We have some kind of like intermediate sell side liquidity here. Right here, relatively equal lows. And then we have a little bit of trend line going. Okay. So I'm looking at this sell side here as a potential target. Market should go there. So now, what I don't know is because generally I like to get my bias, my overall bias on the day based on the daily and 4-hour chart. So today, because on this day, we had that spike up and created that new all-time high. It was a little bit, I'm not going to lie, it was hard for me to get really an overall read of the day. I don't know. Are we going to keep going up? Are we going to go ahead and go down for the day or for the next couple days? It's a little bit hard. I don't, when we get around these all-time highs, I know a lot of times it likes to keep going through them, but here over the last couple days, we keep making new all-time highs. So I kind of leave it there. I rely on my lower time frame because again, based on what I'm doing, I don't need to know. I'm not looking for huge moves. I get my 30 to 60 points. I am done. I only take one trade, right? So I know price should come down here based on what I know. Price should come down here at some point, right? I don't have really a good reason for price to come up here. Although, if I'm expecting price to come down here, what do I need to happen? I need a manipulation to the long side. I need it to go long, open, go high first, and then we can come down here. That's what I want to happen. Now, when that happens, basically what I'm looking for is I'm looking for my entry to go short, to take it down to this area. And if it doesn't give me an entry, right, then I let it draw down here. And once it comes down here, then I could look for a long. But I need a target up here. I always need targets, right? So let's go through this a little more. So I'm just kind of explaining my framework before the market, before it happens. If you look down here, market's not open yet. It's about to open. So let's open. Let's go here. This is the 4-hour chart. So here we have this 4-hour gap. So that's what I have marked. Okay. I have that marked. You can see these relatively equal lows here. The 4-hour as well. Here's the 1-hour. Okay. Here's the 1-hour chart. Relatively equal lows. So it's pretty clear on all charts that we have a sell side liquidity here. What I don't know yet is if we're going to continue long for the day, then what will happen is the market will open. Should happen is the market should open, run down in here, sweep sell side liquidity, and then continue long. Could happen still. It could happen. Or what I'm looking at, or let's just go forward here. What I'm looking at, the market is open. Okay, the market's open. Look, I marked this wick out. Okay. I mark this wick. And what you're seeing here. Okay, let me pause. Now what we're seeing, we are seeing some buy side liquidity being generated here. Okay? It's accumulating. It's generated. It's accumulating some buy side liquidity in this area. Right here. Then we have this wick right here. Okay, this is the 15-minute chart. So here's my analysis. I know price should come down here at some point. Will it go long first, then down? Or will it market just drop down here and then go up? Don't know. All I know is I want to get my 30 to 60 points somewhere in that area. So if I know that should happen one way or the other, what I want to happen now is I want price to come up here into this area, either at least halfway through to this wick. It could even take this London hive, and I'm cool with that. And then I look for my short. Okay. I look for my short to come down, and I'll take a ride down to this sell side liquidity. Or, you know, we have this kind of intermediate sell side liquidity here. There's going to be some targets, but I know price should get down here. That's what I prefer to happen. However, if that does not happen that way, if price just opens, then it does a draw on liquidity here and sweeps, then what I'm going to do is look for when it stops, when it gets down to any of this area, and then I get a long, right? Then I get a long setup. Now I have this buy side liquidity up here to target. That's as simple as it was today for me. So let's see what happens. Price opens. I'm kind of looking at that. I'm watching. And I'm narrating to myself in my video. So I go back and I actually watch my own reviews, my own videos, all the time to kind of sharpen the mind. Okay, so I'm looking here. This is a daily chart. So we might have a huge gap, fair value gap here on this daily chart. We left this one. If price stays up here, we might get another one up here. I get rid of my little logo. It's in my way. All right, so let's fast forward a little bit. Fast forward. And now I'm looking. So now I'm looking at a pause. Price did come up. So it took, you know, this little equal highs we had here, took that, came up. Now what I'm thinking is if price stops here and turns around and runs down, look what we have. Relatively equal highs right here. So if it stops and comes down to here and does not give me a setup to go short, or does not give me a setup to go short, then I wait for it to hit this area, sweep sell side liquidity, hit this 15-minute gap, dig into this 4-hour gap maybe a little bit, but anywhere in this area, I'll be looking for a long to go where? Take out this buy side liquidity and continue up. That's what I'm looking for. However, that's, you know, if it gives me a short entry, then I'll take the short down here. Or if not, I take the long back up there. That's it. That's all I'm looking for. So let me fast forward a little bit more. Waiting. Again, I don't look for a setup until 950, until at least 950. Okay. Keep going. Now we do have a big opening range gap here, so I'm marking out my opening range gap. Okay. Mark out my opening range gap. Fast forward. Now look at this. So I got my opening range gap here. Here's the high. Here's the middle. CE is consequent encroachment. Here's the middle of it right inside that 4-hour gap. Now I am really confident price is going to come down here. Like, I mean, extremely confident. So now I got to wait. How far up is it going to go first? So price. So I have, let's see, hold on. Fast forward a little bit. I don't think I marked it yet. The 8:30 open is what I was looking for. Let me fast forward. But look at this though. It came right to the middle of the wick right here that I marked. The middle of it. Pretty crazy. Right to it. Okay. Let's see. I could have swore I marked the opening range. I mean, not the opening range. The there it is. Yeah, I marked it late. 8:30 opening price. So that's what I want to see when the market opens. I want to see price go up above the 8:30 opening price. Okay. So it does, and it reaches the middle of the wick. I'm okay now. Now I can look for a short to go back down through the opening price at 8:30 and down to this area. It can still go up, that's fine, but now I can look for a short. So I really want, you have this wick here, right here. I really want to see this, the 5-minute chart. This is what I base everything on. I look for market structure shifts on the 5-minute chart because, you know, that gives me a higher probability. You can look on the 1-minute or 2-minute, but if you only have a market structure shift on the 1-minute, your probability is a lot lower to win, just saying. So, looking for a market structure shift. I really want to see this wick taken, this low right here. This one has not created a swing yet because we're still on this bar. So let me go forward, forward. Okay. Now I'm looking because the 5 minute has come down below the opening price here and into the gap, the opening range gap. But we also created this swing high right here. So we have this long-term high. Then we have this high right here. Price should not go back above this. We hit that middle of the 15-minute wick. So now I'm looking, like I said, I preferred it to take this swing low. But since we came back down here, I was okay now with what I was looking at. Because here's what we have. We have my sell side liquidity down here. We have this intermediate sell side liquidity. And then we have all this trend line liquidity here. So my opinion was, once we get an entry and we take these swings here in this area, and if we can come down and once we take this swing, we're just going to shoot down because we have all this trend line liquidity, sell side liquidity, and then this liquidity where it's just going to just rocket down. Okay, then we have yesterday's high there too. So let me fast forward it a little bit. So what I saw was on the 1 minute when I dropped down, we do have displacement here. Well, technically we have a market structure shift here on the 1 minute. I do like I said, this swing high. Then we created this swing, and then we had this gap as we took this swing here. So below the 830 price. So what I really like is when it comes back into this gap, it should not take this swing right here, and definitely not this one. So I'm going to enter in this gap right here, this fair value gap. My stop's going to be right up here, and I'm going to target that sell side liquidity. So there we go. We go in. I get kind of a bad feel because I always just market into these things. So let's see. Let me go back. Let me show you my order entry. It pops up, and I was actually a little bit late to it. So you can see I wasn't quite prepared, but I hit the sell. Boom. It kind of fills me in here, but it's fine. As long as it fills you between this gap and this low, then it's perfectly okay. I have a dealing range marked out right here. This swing high, this low. And we are in the premium of that little dealing range right there. So I'm in. Now, this trade did take a little bit, but I threw in my stop. So that's how I do it. You know, I get in. Let's go back 1 second. So I get in, and then I go and put my stop up there. Right there where it's supposed to go. Then I go down to where I want to take profit, throw in my target. I always want my profit and stop to be at least a 1.5 to 1. Preferably a 2 to 1. Okay. But no less than a 1 to 1. So now it's coming down. So what happens is it kind of hits a little bit of snag right here, right? It hits a little bit of a snag around the opening range gap, the 830 price. It hits that little snag, but once it takes this, watch what happens. Just going to fast forward a little bit. So it shoots down, takes this swing right here. Okay. Now, it didn't just keep going, though. It didn't just keep going. It pulls back because we are a little bit early. See, it's 9:50. It's not quite 10 o'clock yet. So time makes such a difference into this. Time makes all the difference. Let me fast forward. Pulls back up into here, into that gap. Never closes the gap. This 5-minute chart I'm watching. So I drop back down into the 1 minute. Now, I'm not worried at all because my overall, that's way too much liquidity down there. Yeah, you can look and say, oh, I was up 80 ticks and now I'm down negative, right? But it's because I'm reading the market. I'm okay. This gap that happened here is because a lot to the naked eye, people will say, oh, well, we had a market structure shift here. It took this swing, left this gap, It's going to go into and then go long. I don't see it that way because of everything down below. It's got to go short first to that sell side liquidity and all that down there first, and then it can go long for the rest of the day. But I already got my trade at that point. So now what I'm really looking for, I don't want price to close above this gap, and I definitely don't want it to take this swing right here. If it takes this swing, that's a bad sign. It might go up. And then definitely if it takes this, I want out. So what I'm looking for is I really want this gap to get inverted, to become an inversion fair value gap and go down. And then just once that happens, it's game over. It's going to rocket down. Let's fast forward a little bit. And you can see the swings. Look at the swings, how it's setting up perfect. Like no worry at all, because the structure is there. It's beautiful. It's beautiful. So now we wait. I'm back on the 5-minute watching. Extend out my fair value gap a little bit. You can see it never closed outside of it. Now what I'm watching is my equilibrium here. Now I have this dealing range. Okay, this high, this swing low. That's my dealing range. Here's the premium. My gap is in the premium. Okay, so you actually could have waited until it created this dealing range and pulled back here and got in afterwards and saved the 80 point, the drawdown basically I took, even though I get it back. But you could have saved that and then got in here and then now be in the trade and really took no heat. But, either way, as long as you know what should happen, right? So now I came back into it. Now if you look at equilibrium right here, I want to see it respect equilibrium. I don't want to see it close back above equilibrium. Now it should not really come back up into this gap anymore. That's what I'm looking at. Here's equilibrium, this blue line. It should respect that now. Okay. I'm going to fast forward a little bit. And you can see, look at the bodies. The bodies are not closing above equilibrium. Look, it's respecting it. I'm highlighting that there. Look how it respected it. Look at the bodies. Respected equilibrium. How in the world can you tell me this is not algorithmic? It's just so good. Now look at price. Look at it. Now we're seeing that explosion down. It pops. It hits the London low to the tick. Look at that. To the tick. Kind of this little bounce. I'm not worried. There's too much sell side liquidity. I'm never worried. However, it should not come back up here at all. It should not come back above this swing. Technically, you can tighten your stop, which I'm about to do, just in case I'm up 100 ticks, just in case this thing decides to go whoop all the way back up, because you never know. The market's crazy, and you never know. Now my risk is, what's that? 11 points? 11 and a half points? I'm cool with that. Let's just sit in it. Hits yesterday's high. And bam, we're about to pop right down through my target. Now, if you didn't catch that, so it hits my target. Boom, I'm out. It's like close to 40 points. It's like 36, 37 points, something like that. Throw in my execution so you can see. Bam, there we go. 35 points or so. This was the low-hanging fruit. Why did I take that target? I guess I may have missed right here. This is where, if you see, this is the 5-minute. We have this gap right here, this fair value gap. I extended it out. That's the first real imbalance after, into the discount. I, without a doubt, thought it was coming down here, because I initially put my target down there. But I keep having to remind myself I'm going for the low-hanging fruit. So right down here to the low-hanging fruit, bam, I'm out. Done. No, that's it. And then, let's see. It goes down. You have the opening range gaps. It did. It actually came down, and it ran right to this, like right in this area. And that was it. See, here it goes. It's right in that area. And then that's about where I stopped. So that's it. That was it. That's what I saw. That's what I read. I didn't even check the rest of the day. I don't even know what happened after this. I don't care, because the next day I come back, analyze what's going on again, and do the same thing over and over. So the results have been amazing for me. But anyways, that's my trade review, and I hope you get something out of it. And like I said, I will be going live again, so stay tuned for that. All right, have a great day. Take care and trade well, everybody.
Yeah.